If you think the outlook for the UK economy is looking very bright, you might want to buy exposure to the UK stock market. Well, of course, you can buy the whole market through an exchange-traded fund. One of these tracker funds can do so very cheaply. So what do we need to consider when we buy one of these funds? Well, there are three factors. The first one is the fees. The second one is the fees. And the third one is the fees. Of course, I'm being facetious. There are other factors you have to consider. So let's look at those factors now in detail. Remember, this is not a recommendation. If you're thinking about buying an ETF, seek independent financial advice. The job of an ETF is very simple. All it has to do is track an index. The point is you don't have to think. All you have to do is to stick to that track. But the question is, which track do we follow? There are several UK stock indices, and they're grouped according to something called market capitalization. So let's just take a quick look to see what that means. Firstly, let's consider a small company. Let's consider Flybe. Instead of looking at the price of a single stock, we'll look at the price of all of its stocks. So all we do is we take the number of shares, and it's got about 217 million shares, and we just multiply by the price per share. And the product of the two is called the market capitalization, or the market cap. And for Flybe, that's very small. It's just £88 million. Now let's look at a really large company. Let's look at Royal Dutch Shell. It has over 8 billion shares, and they're worth £20.80 per share. Multiply the two together, and you get the market cap of 170 billion. So the range of market cap for the London Stock Exchange runs from about 100 million to about 200 billion. As prices fluctuate during the day, the market cap will change. So when you come to look at these numbers, they'll be quite different. But the reason why we introduced market cap was because that's how stock indices are organised, according to the capitalisation of the companies in the index, ranging from large cap to small cap. The 100 largest companies on the Footsie 100 by market cap go into the Footsie 100. The next 250 largest companies go into the Footsie 250. And the 351st to the 619th largest companies go into the Footsie small cap. There's also the Footsie 350, which combines all of the stocks in the Footsie 100 and the Footsie 250. And the Footsie All Share, which combines all three. So now we know what we're tracking. What's the objective of the tracker? It's the performance of the index. So if the index goes up by 1%, the tracker goes up by 1%. If the index falls by 1%, so does the tracker. If you look at the information documents for many of the trackers, you'll see a graph that looks like this. In green, it shows the performance of the fund since April 2000. The index that it's attempting to track is called the benchmark. In this case, it's the Footsie 100. Now, the tracking won't be perfect. You'll see that the two lines diverge over time because there's a cumulative tracking error. In a perfect world, that tracking error would be 0. So the name of the game is tracking. And for the Footsie 100, we're tracking large companies. Now, because these companies have a large market cap, they're very liquid stocks. That means the difference between the buying price and the selling price is very small. And for the fund managers running these ETFs, that means they can track the index very cheaply. Also, there's no thinking involved. We're not trying to beat an index, we're just trying to copy it. And the cost of these passive funds, as they're called, is much lower than active funds. So all of these factors together mean that we should expect super low fees. How do we measure the fees? Well, we use something called total expense ratio, or TER. And what we're paying for is the management fee for the fund manager, but also any kind of expenses which they incur running the fund will be passed on to us. And it's expressed as a percentage of the net asset value of the fund. What does TER mean for you? Well, if you invest £10,000 and the TER is 1%, then every year you'd pay 1% of 10,000 or £100 per year. You can see that there are 8 funds which track the Footsie 100. The column you should be looking at is the total expense ratio. You can see that's well below 1%. For the cheapest fund, which is ISF, it's only 0.07%. Another column you might find interesting is the NAV. That's the size of the fund. NAV stands for net asset value. And you can see that for ISF it's 4.7 billion. There are 2 trackers for my shares here, ISF and CUKX. One of them gives you the dividend every quarter, That's ISF. The other one, CUKX, accumulates the dividend as part of the fund, as if you'd reinvested the money back into the fund. But both of them have exactly the same total expense ratio of 0.07%. That means that if you invest £10,000 with a total expense ratio of 0.07%, you'd only be paying £7 per year in management fees, which is reason to be very happy. If we actually look at the composition of the Footsie 100, you can see that there are lots of banks, lots of energy companies, and lots of pharmaceutical companies, many of which are multinational. You'll often hear people say that the Footsie 100 is not really a UK index at all. It's a global index. If you want more exposure to the UK domestic stock market, you'd buy the Footsie 250. But in fact, it's not quite as simple as that. This is a 2014 article from the Morningstar website by Hortense Bioy. It makes the point that 15% of the holdings of the Footsie 250 is made up of investment trusts, and the exposure of those investment trusts is global. So it's misleading to think of the Footsie 250 as a purely UK domestic index. Fortunately, there are several Footsie 250 trackers. You can see 6 of them here, but you'll also see there's no Footsie Small Cap ETF tracker. There are no Footsie 350 ETF trackers, and there are 2 Footsie All Share trackers. Here are the 6 Footsie 250 trackers, and here Vanguard is the cheapest, with a total expense ratio of just 0.1%. The iShares fund is much more expensive, that's 0.4% per year. So there was your quick overview of the trackers for the UK stock market. Maybe you don't invest in ETFs at all, perhaps you prefer investment trusts. If that's the case, please tell us, we'd love to know. Tweet us at PensionCraft, message us on Facebook, and if you want to see more of these videos, subscribe to our channel.